So, when there's big breaking news, that often means we're going to have an exciting time in markets. Let's talk about that. So, I just posted a Substack piece, and I'm recording this at a time when there are some big breaking news stories. In this particular case, having to do with Greenland, but it really doesn't matter. It's all the same thing. When there's a big breaking news story, we'll often see markets go crazy. Generally speaking, it's temporary. But what I did with the Substack piece was I was talking to myself essentially, and I was reminding myself of 6 things that I always want to look at when I'm unsure about my investing because markets are going so crazy. Before we get to those 6, I want to talk about the difference between buy and hold and active trading. Buy and hold, and you know this, these are people who put together a portfolio or have one put together for them, and it's based on their time horizon, their risk tolerance, their goals, everything else. And essentially what they're going to do is just let it sit there, which is perfectly fine. And I've had clients who wouldn't look at their portfolio for months at a time because really it is a long-term portfolio. Well, what happens is the market goes south. They're not watching it. It goes back up and they're not watching it. And it ends up being just fine. Now, these people are not going to be beating the market per se, but they're getting what they expected out of their portfolio because the portfolio, as it is made up, is going to behave essentially as you think it might over time. So those are buy and hold investors. They're smart people and they deserve respect. Then there are people like me who are active traders who enjoy pain and self-loathing and all of that comes with active trading. So what we're talking about today is active trading. And generally speaking, I have 6 things that I sit down and I talk to myself about. I make sure that I am doing when things are going a little crazy because it really does matter. So I remind myself, first of all, guard against strategy drift. And what I mean by that is all of us end up with a strategy. Well, we didn't just flip a coin one day and come up with a strategy. This is something that we've thought about, we've back tested, we've made mistakes on, but we've tweaked, and it is our strategy. Well, what happens though is if we have a bad time, if we have a few bad trades in a row over the course of a few months, then we'll suffer from strategy drift and we'll start changing the way we do it. I still do it. I still let myself get caught in looking at new ideas. And I generally will do that when I've had a few bad days. If you really trust in your strategy, if you have really done your homework and done the back testing, and if you have a strategy that is comfortable for you, because we're all different psychologically, trust in the strategy. It's going to go down. In fact, when I was an advisor before I retired, that's the one guarantee I made clients. This sucker is going to go down. It's going to happen. But if you trust in your strategy, stick with it. I also remind myself, and I kind of refer to this already, don't overinterpret breaking news. You know, the same thing happens every time there's a huge breaking news story. The market will either go way up or way down. And then I call the market the biggest drama queen in the world because that's what it's going to do. It's going to overreact in the short term. And I know that the temptation is to jump along with it. I don't recommend it. And this goes back to the strategy and sticking with the strategy. And the way I look at it is, I think what happens is the market looks at the short-term news. It makes a bunch of assumptions and extrapolations about what it's just certain is going to happen, right? And then people will make their changes, and then the market will remind itself that prices are about corporate revenues, corporate profits. And then things seem to calm down, and the drama queening is over, and then we get back to business. So you do have to watch the news. You have to be aware of macroeconomic conditions, political conditions, news conditions. You have to be aware of that. But when there's a breaking news item, I have to remind myself, be careful, let this play out, let this thing breathe. And let's not also forget that sometimes the news is wrong. So I have to remind myself, be careful with breaking news. Another thing that I have to remind myself is that chaos validates smart diversification. Now, that word diversification and I have a troubled relationship because normally diversification means, in a typical portfolio, it means growth stocks, value stocks, emerging markets, overseas stocks, and lots of bonds and some cash. That's typically what diversification means. I don't like some of those parts. I'm not a big bond guy. Bonds just don't move fast enough for me. I'm not a big value guy, and I don't like a lot of cash sitting on the sidelines. So how in the world am I going to diversify? Well, the way I do it personally is I diversify into things like futures, where I can invest in fuels, where I can invest in agriculture, in metals, in currencies. And they perform as any diversification. And really, I'm looking at it more as a hedge. Because when the market goes down, I want something that is not necessarily going to go down with it. But what chaos does is it reminds us to stay diversified. And if it's my way or if it's a traditional way of diversifying throughout traditional securities, like, again, emerging markets and bonds and overseas and everything else, that's fine. But let this be a lesson to myself. When chaos happens, I'm glad I was diversified in different kinds of areas. Number 4, I'll bet a lot of you who have been around the block with investing are nodding your head. You know, it's so hard to stay disciplined. And again, this goes back to the strategy drift kind of situation. You have to stay disciplined within your strategy when things go sideways, because you have to understand it is going to. And you also have to understand, and speaking to myself here, I have to understand that news changes. And if it comes to something like the economy, look at the COVID drop of 2020. 34% down in 30 days. That was a record for the speed of a drop. Then what happened? Well, the Fed jumps in with all kinds of help. We see a V-shaped recovery, and people who thought this was a long-term deal are left out in the cold. They're out in cash or they're shorting the market. So we have to stay disciplined in the way that we do things, and I have to remind myself that all the time. If I'm feeling doubt, stay the hell out. This happens more if I've had a few bad trades. So I'm what is called a swing trader. I generally will be in a trade from anywhere from a few days to months. You know, it just doesn't matter. I just make sure it's still growing. Well, if I'm feeling doubt or if I've had some bad times, I would rather just stay out, stay in cash, and live to fight another day. So that's how I look at it. Don't make revenge trades. I don't want to make trades out of rage. And I've done it. I've certainly done it. And I don't want to bend. I don't want to lower my standards as part of my strategy. I'm going to stick with the strategy as I have it. And most of the time, I'm very glad that, again, if I'm feeling doubt, I stay the hell out. And never, ever forget priority number 1, my priority number 1, which is the same as Warren Buffett's priority number 1. And that is, I have to remind myself the number 1 thing I have to worry about is not losing money. That's rule number 1. Rule number 2 is never forget rule number 1. Live to fight another day. If that means having stops in place, whether it is by percentage drop or through some kind of technical analysis or a time frame or a profit, whatever it is, make sure that you're protecting yourself. You know, the big traders who do a lot of like day trading or short-term trading, they get these huge returns. Not all of them, some of them get these big returns by understanding that they're going to cut their losers short and let their winners run. That's the magic of theirs. And they can be wrong over half the time, but because they're following that formula, cut your losers short, let your losers run, they can do very, very well over time. So don't forget, priority number 1, at least it's my priority number 1, and that is protect myself, lose minimal money. Those are the 6 things that I have to remind myself all the time, but especially when markets are in chaos like they have been. I hope that helps. We'll see you next time. Thanks.